Hello and welcome to the weekly outlook. Just going through the calendar, we've actually got quite a subdued week next week. The good thing is, also we've just had the non-farm payroll on Friday, and we've had some fairly significant pullbacks against the US dollar. Now the Australian dollar there being one of them, we're looking at entering this at 7.4, and it's just gone through there a little bit at the moment, but it's still within this sort of zone. You see this zone that I've outlined here has been the immediate sort of sell zone at the moment. Now next week we haven't really got a lot of data coming out on the Australian dollar, so things could be sort of either start to return to their normal sort of direction. Um, We've got the NAB business confidence on Tuesday, so we'll see how that goes. Let's have a look at the past readings there. They actually have got quite a bit higher recently. They've moved up from 3 in April 14, April, all the way up to 10 in July. So we'll see if that still holds up high there. We've got the CPI on China out at 2:30 a.m. on Sunday. If that comes in low, it's actually expected to come in slightly better, but if it comes in lower, then we could see the Aussie start to push down. But what I'd probably recommend now is, if you're not in this trade, then I'd recommend waiting to see if we get some sort of candlestick patterns showing a reversal pattern there, something like an engulfing candle here, like we have here, where we've got this big long candle engulfing the previous one, or what we call a pin bar, where we've got the wick of the candle there, big long wick where it's getting pushed down as sellers are coming back into the market. So keep an eye on that one. And the other one I'd keep an eye on is the euro as well. That's had quite a big pullback due to the non-farm payrolls. The data wasn't that bad coming from the non-farm payrolls. It was actually okay. So it's really just profit taking that's coming into the market. So I expect these currencies, which are weaker than the US dollar, to return to the downside. And that will probably happen next week, especially with a subdued market. And then we've got Lockhart, FOMC member Lockhart, speaking on Monday. He's quite hawkish recently, and also later in the week we've got core retail sales and retail sales on the US dollar, which are expected to come in slightly better. That's not until Thursday, so be looking to position yourself ready for Thursday for the retail sales figures, and looking to take advantage of these big pullbacks we've had, and looking to get into short positions on things like the Aussie dollar, US dollar, the euro, US dollar, the pound. At the moment, I would stay out of the pound just for a while. We did get some disappointing data. It was okay, but it was a lot more. It was a lot less hawkish than what the market was expecting it to be. So we are getting a correction, and I wouldn't be surprised to see the 15350 level touched again before we get another rally. So I'll just stay out of that for a moment and let that play out. Other thing, the New Zealand dollar US as well is another one that's ripe for the picking. Again, looking for further downside on this. I'd wait for this to pull back, maybe back up to the 61%. This has actually changed. If we just pull this down a little bit, wait for this to pull back up to that 61% there, around about 6637, and then maybe look to sell that as well at the start of the week there. We've completed this target, as you can see, initially. So now we're pulling back off that, and I'll be waiting to look to get back into there. So looking for around about that 50-61% retracement level. Apart from that, it is pretty slim on data, so we are kind of just using the non-farm payroll on these pullbacks to get into some trades ready for Thursday. Okay, only a short one this week, not really much to go into. Thanks for watching, and I hope you can make some pips.